What up, traders? What up, investors? Ken here from the Dyslexic Investor, and thank you for tuning in for another fantastic video. Today, we're going to be looking at a Wall Street Bets post from Markets Swing user talking about his technical analysis, his due diligence on trading shorter dated options within the S&P 500, aka he's using a lot of SPX. So if you're not familiar with SPX, it tracks just like the futures and the overall SPY, but it's a cash settled ETF or a tool to be able to, if you get caught being in the money, you're not going to be getting anything. There's no execution on it. You're going to lose, win or lose, depending on where those options close or post. A lot of people use this SPX, especially for weekly income generating within options of just selling premium or going long or short, depending on what the market's doing. And this individual looks like a little bit of a backup. Like this guy individual has made a pretty substantial gain here, trading SPY and SPX, to basically say give the big middle finger to all those folks who are saying that TA or technical analysis is completely pointless. I think it definitely, I know and I love it. Of course, there is an important key factor of knowing what's really kind of going on somewhat in the world. I'm not a completely full-on 110% technical analysis. I definitely need to know what the stock, what kind of overall group is it in? Is it an airline? Because again, all those airlines have been getting hit, same with the cruise lines and so forth. But that being said, let's go ahead and look at the technical analysis and the breakdown of the technical chart of this individual who made a very nice particular play here within SPX or aka SPY. Basically seeing here, noting that his trend lines, again, trend lines are very difficult to interpret. It's really into the individual and how they are drawing them. You can kind of see here, he's going to the candle edges here. So he's going to the very tippy of the candles, not doing the full close or open of the how the market closes and open on the full candle. He's doing the wick of the candles. But again, that is some interesting interpretation on these charts. Again, I think anyone that has a steady hand can draw some trend lines. My 4-year-old can probably do a fantastic job drawing trend lines on charts. Not saying that they're bad. It's just, again, they're very much easy to skew in either direction. Clearly, once we look at the individual who posted this, and then also looking at our own charts, you clearly know that SPX has been going down. If you don't know, it hasn't been going down. It has been trending lower. You can see that with the moving averages. Of course, the trend lines actually kind of help support that to some greater extent there. But this individual has been using this for the past couple weeks, it looks like, on using maybe the last 3 weeks of this downward trending SPX or SPY and showing some very key levels of support. And I think guessing these purple arrows was when he sold or bought. I'm not quite sure, but he was saying that he was going full bull mode on Thursday of last week, looking for a move up to that 33.50 to 33.60 range by Monday. So that was a pretty bold call to be let's call it the way it is. Some key levels that this guy points out, basically what we talk about here, this has been a support level here that we see here on the SPX. Again, this is on a daily chart kind of with the overall virus. We saw that huge downturn, but this level here, this green level, has been a very high attraction rate for a lot of the moving averages and the overall movement of the candles. You can see that a lot has happened at those ranges here. We've hit that top here once, but then we had some struggling here, blew past it. Now we're coming back down to kind of touch it, get a little kissy kiss on the cheek, and we could potentially go higher from here. That being said, this individual technical analysis is actually very well thorough, I think, and he does a very good job on highlighting his key levels on why he put that there and the reason why he thinks that those levels could be reached and why. So very well thought out. Again, this individual has a backing he has money to back his overall statement, so it's not just a YOLO kid in his college dorm room just saying, hey, buy this, buy that kind of scenario. That being said, he updated it this morning as well, and seeing those green candles really come into play here, looking for that higher of basically hitting his marker on the target of the third target there. That being said, let's go ahead and switch over to the charts that you may know and love. My wonderful Thinkorswim down here. Even though that I love using Thinkorswim, I don't actually use it to trade. I just use it for charting. I love using my Tastyworks account, and if you're interested on looking at Tastyworks, there's an affiliate link down below, which is a fantastic options to trade options for. So definitely check that out down below if you're interested on trading some more options there. That being said, going here to the chart here with SPX here, we really seen that huge, like, kind of, I wouldn't say flush lower. It's more like a slowly grind lower and just kind of just churning a lot of red days out and really looking on trapping a lot of people on buying the dip. The reason why I say that is we're seeing like these fake V-shaped recoveries here. So we had that really strong pull down, fake V-shaped recovery, pull back down, fake V-shaped recovery, and then really pulled down. And then we got another V-shaped fake recovery. And now we got a substantially pulled back, but we pulled back to that same level that we just saw a weeks prior, really kind of coming into fruition, that 3,230 level, basically kind of showing where the 200 EMA lies. Again, we're looking here at a 4-hour chart, and we actually turned off extended hours trading, which means the pre-market and then aftermarket stuff. Again, the volume's not very high in those days, and it can really just move around a lot of scenarios there. So looking at this definitely looks like it could be a recovery. We are, again, the way we look at things, the 5 and 8 is really starting to curl up. So if we get that 5 and 8 to aggressively cross through the 21 EMA, we can see some potential targets. Again, we're looking for 3,362 to break here to the upside. We did have the parabolic SAR purple dots switch here as well. So that trend that was kind of the kangaroo slash overall, would maybe call it a bear dance market, basically to the downside here, has kind of recovered here slightly, and it's potentially trying to go higher. I'm not running out here like that individual making bold bets that, hey, we're going to hit he's not saying all-time highs, but to potentially break in this really bull market to continue. That being said, we can definitely see some further upside. Again, what is the catalyst? So within our Discord, if you haven't joined already, that's linked down in the description. A lot of folks were very hesitant. And of course, we have Mr. Bear in the chat, wonderful gentleman. He was saying, like, what's going to be the catalyst to really keep this market going higher? I think the catalyst, honestly, what comes to that is the sense of like, hey, the overall, most people are very optimistic. And of course, a lot of the folks who have been day trading stuff have really hurt their account substantially. So I think there's going to be kind of the shakeout of the YOLO traders that we've seen here, and the potential of buy the dip folks are really kind of somewhat been burnt a little bit. So there's a little bit more hesitation in the market, and rather just jumping into the car and just hitting the gas, the pedal to the metal, and just really driving recklessly here. I think that there is a little bit more caution in the market. You can kind of see that here, with that overall swings here. With that being said, with SPX and SPY really gapping up pretty large today, being up nearly almost 2% at one point, was pretty substantial. That is definitely kind of showing the potential bears of, like, just saying that there's a lot of people that are just buying the dip here, and of course, basically creating a very opportunity for the bears to prove wrong. So where could the bears potentially come in and show some support to the downside here? So here we just did a Fibonacci retracement from the swing high to swing low. My initial would be looking at basically the 3,400 level would be my first level of initial, where bears could come in, maybe do a guerrilla warfare attack and kind of catch the bear off guard, and potentially could carry it lower. That would also be a key level where the 50 SMA lies. So the 50 SMA is another key level that a lot of folks use for trading on the very technical side as well. Again, we're looking here at a 4-hour chart, so it's a little bit different than we normally look at a daily chart. That being said, that would be a very key level here. So we even actually switches back to a daily chart, which that's the one we know and love. That basically that level really kind of comes in around the same price. We can kind of just move this ever so slightly, because again, it was tied to that 4-hour chart, is basically around that basically 3,400 level. would be the next level to potentially see some bears try to come in, because we've seen some issues at that level before kind of coming in here. That was the beginning, the first week of September here, and kind of getting some overall tough consolidation there. That would is not the 50 percentile move is not a Fibonacci number, but it's a very defined number within a bounces of previous and higher swings here. So this is definitely something to be mindful about. Again, with the 5 and 8 really starting to curl up higher, we're getting the overall momentum switch from red to yellow in the TTM squeeze, and RSI is also building. This is definitely a pretty substantial, significant sign that we could see some higher prices come in the short term. Again, I'm not going to be the one that's going to be shouting from the rooftop saying it's got a brand new, the overall downward swing and kangaroo market's closed. No, there's still some underlying issues that I like to see. We do have earnings starting off here soon as well, coming out with somewhat towards the end of October with Bank of America, aka the bank stocks, really are going to start coming in basically the 14th of October. So basically 2 weeks away, we're going to be definitely seeing some interesting stuff happening from there. But that being said, some key takeaways before I let you go. We're at some key levels here. The bulls are really trying to kind of kick the bear down and really take it down. Some key levels to look at here. We're looking for some downside support in the short-term side around 3,200, or 3,300 level to the downside, and even longer dated support kind of coming around the 3,200 level down to the downside here, since we had the parabolic SAR switch to the downside, and as well trying to get above that 21 EMA. So this would be very important to see on how we close today, if we can stay above the 21 EMA and really see the purple and white line, which is the 8 and 5 EMAs, to potentially cross through the 21 to see that momentum carry us higher, to kind of get us that momentum and overall strength to get us past that 3,400 level to potentially get someone out of this choppy market. That being said, guys, thank you so much for watching. Please don't forget to like and subscribe. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.